Hello everybody, I'm Dr. A. Nagalakshmi, Assistant Professor, Department of BCom Finance, Dr. SNS College of Arts and Science, Autonomous, Coimbatore. I'm here to share the concept royalty accounts. First, we should know what is meant by royalty. Royalty is payable by a user to the owner of the property or something on which an owner has some special rights. A royalty agreement is prepared between the owner and the user of such property or rights. If payment is made to purchase the right or the property, that will be treated as capital expenditure instead of a royalty. Payment made by the lessee on account of a royalty is normal business expenditure and will be debited to royalty account. It is a nominal account, and at the end of the accounting year, balance of royalty need to be transferred to normal trading and profit and loss account. Royalty based on production or output will strictly go to the manufacturing or production account. In case where the royalty is payable on sale basis, it will be part of the selling expenses. So royalty comes when a person leases a property. So when a property is leased, here the user of the property has to pay to the owner as some prescribed amount, agreed amount every year for the period the property has been leased. That is said to be royalty accounts. Types of royalty. There are there are three types of royalties. One is copyright, the second one is mining royalty, and the third one is patent royalty. First, we are going to see what is meant by copyright. Copyright provides a legal right to the author of his book or books, the photographer on his photographs, or any such kind of intellectual works. Copyright royalty is payable by the publisher, that is lessee of a book, to the author, leaser of that book, or to the photographer based on the sale made by the publisher. The second type is mining royalty. Lessee of a mine or quarry pays royalty to the leaser of the mine or quarry, which is generally based on the output basis. The third one is patent royalty. In case of the patent, publisher of the book pays royalty to the author of the book on the basis of number of books sold. So, holder of the patent gets royalty on the basis of output, and the mine owner gets royalty on the basis of production. The next one is basis or nature of royalty. The royalty is based on the payment of rights, not for goods, at agreed rate, periodic payment, nature of the expense, purchase of rights. Important terms of royalty. The following are the important terms which are used in royalty agreement. The first one is royalty. A periodic payment which may be based on a sale or output is called royalty. Royalty is royalty is payable by the lessee of a mine to the leaser, by the publisher of the book to the author of the book, by the manufacturer to the patentee, etc. The second term is landlord. Landlords. Landlords are the person who have the legal rights on mine or quarry or patent right or copybook rights. Next is tenant. An author or publisher, leaser or patenter who takes out rights, usually commercial or personal rights, from the owner on lease against consideration is called tenant. Minimum rent. According to the lease agreement, minimum rent, fixed rent, or dead rent is a type of guarantee made by the leasee to the leaser. In case of shortage of output or production or sale, it means leaser will receive a minimum fixed rent irrespective of the reasons of the shortage of production. Payment of royalty will be minimum rent or actual royalty, whichever is higher. For example, Messrs. Rati Publication printed a book on Java on the minimum rent of rupees 10 lakhs per annum, royalty being payable at rupees 20 per book sold. In the first year of publication, Radhi Publications sold 75,000 copies, and in the second year, number of sold books fell down to 45,000 only. The amount of royalty will be payable as under. The first year 75,000 books into 20 rupees per book, so it is payable 15 lakhs. But the minimum rent is 10 lakhs. Royalty payable 15 lakhs. The second year, the books sold were 45,000 books into 20 rupees. It's only 9 lakh, but the minimum rent is 10 lakhs, so the amount royalty payable is 10 lakhs. I think you might have understood what is meant by royalty, what is meant by the amount, what is the amount to be paid as royalty to the owner of the land or quarry, or the author of the book, or the manufacturer. Thank you so much for patience listening.